You will not become a profitable trader if you do not understand risk management. Risk management is one of the most important things when it comes to trading. It's so important. Right now, I want you to take out a pen and a paper. And the best thing is, this is a video, so at any time you can pause and go back, because at this very moment, I'm going to give you all the sauce to become a profitable trader. First things first, who am I? My name is Roderick Mack, and I'm the founder of Mack's Trading Family. I invest my time in helping others become profitable traders. My 3 years of trading experience has brought me to a 4-week profitability streak. I'm working on my 5th week now. And given that this is a YouTube channel and anybody can claim anything, you can always join my Discord where you can fact check me and follow along. My goal is just to give you the basics to learn trading, so that when you're ready to learn a proven winning strategy, level up, and get hands-on guidance, you can come to me. Now let's get right into it. Risk management is a strategy to limit losses and protect capital, allowing traders to stay in the game long enough to be profitable. Successful trading isn't just about making profitable trades, but controlling losses. Effective risk management is what separates successful, long-term traders from those who blow up their accounts. Also, stick to the end for a bonus and a sneak peek to see how exactly I use risk management in my strategy. I kind of look at risk management like the tortoise and the hare. You know, the tortoise took off nice and slow, taking its time, and then you got the hare who just sped on by, going fast as he can, all the way to the finish line. But who won at the end? The tortoise. I say it to say, because if you really take risk management serious, it may be slower because your risk is more controlled. But trust me when I say, stick with it, and in the end, you will win. Now let's talk about risk to reward ratio, or RR. It compares the potential profit, or your reward, of a trade to the potential loss, which is your risk. And just as important, you have your risk per trade, the percentage of capital that you are willing to risk on a single trade, which is typically 1 to 2%, and that's what I recommend. Now, many traders aim to make a minimum of 2 to 1 reward to risk, meaning they aim to make at least twice as much as they're risking on each trade. So risking $1 to make 2, 10 to make 20, 100 to make 200. With a 2 to 1 risk to reward, a trader can be profitable even if they only win about 50% of their trades. Now let's talk about position size and calculating that. Now, your position sizing is how much of an asset to buy or sell to stay within that risk per trade percentage. Now let's talk about calculating that position size. It's calculated by the amount a trader is willing to risk on a trade by the trader's stop loss distance. Now let's break that down a little bit. If a trader has a $10,000 account and the trader is willing to risk 1% per trade, they risk $100 if the stop loss distance on the trade is 10 pips. And then the position size would be the amount of currency or share that the trader is willing to risk that would cause a $100 loss if the stop loss is hit. If the stop loss distance on the trade is 10 pips, the position size would be the amount of currency or shares that would cause a $100 loss if the stop loss is hit. Now, let's talk about stop losses. A stop loss is a predetermined level at which a trade is automatically closed to prevent further loss. And for the most part, you only have about 2 types of stop losses here. It's your fixed stop loss, which is a set price level based on how much you're willing to lose. Then you have your trailing stop loss, which moves in the price and the direction of the trade, helping to lock in profits as price moves favorably. Now your fixed stop losses, I like to call those your set and forgets. You set your stop loss, you set your take profit, and then you're able to go on about your day until one of them gets hit. Then your trailing stop loss is when you're more active. Say your regular is a 3 to 1 risk to reward. It won't make sense to see price go all the way to 2.5 and then see it all come all the way back down to hit stop loss. No, at 2.5, I would lock in some of those profits, putting my stop loss past break even and then trailing up as price goes up and up. Now here's a major tip. Stop losses can be placed above or below support and resistance, or swing highs and swing lows to prevent early stop outs while protecting against big losses. Stay to the end and I'll show you exactly how I do so in my strategy. Now let's talk about something very important, the psychology of risk management. Risk management only works if you stick with it and resist the urge to chase losses or double down. Just trust yourself and trust the process. Be patient. I want you to avoid using too much leverage, which increases the potential gain but also increases the potential loss and could quickly lead to an account wipeout. Next, I want you to avoid ignoring stops or moving them after you place a trade. It can lead to a large loss and a common pitfall. Honestly, I recommend just using a fixed stop loss so you can place your stop loss, your take profit, and be able to walk away. Set and forget. Last but not least, I want you to avoid trying to win back losses quickly, which often leads to emotional, unplanned trades and bigger losses. Now, when I tell you to avoid these things, it's not just me talking out of the side of my neck. I'm gonna show you this trade I took back when I started, and I can now look at it and laugh about it, and so you can you too. But I also want to show you it to avoid it. As you see this, I entered around here, and then I just was so certain that it would reverse and hit my take profit, which I believe was only about $40. I remember I went to sleep, and the next day I whopped on the charts, and I think I lost around like $230 on the single trade. So when I say follow your risk management and stick to your rules, I truly mean that. Now let's talk about the importance of a trading journal. A trading journal allows you to build a risk management plan. Now in your trading journal, I want you to build a risk management plan. All a risk management plan is that helps you define your own risk parameters, including maximum loss per trade, maximum daily or weekly loss, and maximum drawdown. Then stick to them consistently. Me personally, when I lose 2 trades in a day, I close my computer and I go on about my day. And I'm also not comfortable with losing more than 3% in one day. Now, in your trading journal, I want you to keep track of risk. Maintaining a trading journal helps track your risk per trade, reward to risk ratio, and your drawdowns. Also in that trading journal, I want you to take screenshots of your trades like you can do in TradingView and insert them in your trading journal. That way you can review your past trades, allowing you to analyze whether or not that you were sticking to your risk management plans and trusting the process. Now if you click the first link down below and join the family, I actually have in the resources tab a template for both your risk management plan and your trading plan and how to set those up and use them. Now if you made it this long, congratulations, because this is exactly how I use risk management in my strategy. For the most part, I'm a scalper on the 5 minute, so most of my trades are 1-to-1 risk to reward. My strategy for the most part is very simple, but I had to emphasize on my confluences. I had to make sure that month after month, my win rate is greater than 50%, or I won't make any profit that month. And you heard me say earlier, once I lose 2 trades in one day, I close up my computer and go on about my day. Also, after 1 win, I close up my computer and go on about my day. I don't want to be at the charts all day. That's the whole point of doing this. Interested in more? If you want to dive into Forex trading for free, go check out my MTF Discord. I break down the basics so you can start trading and making money all from the free community. And you're ready to level up, we got the inner family, where I'm actively trading from 8 to 11 a.m. Eastern Standard Time, give the best trading advice, and we have a blast while making money. If you want to get started, hit the first link in the description. My goal is very simple and straightforward. I want to create 1,000+ profitable traders and give them the opportunity to choose and create their own futures, just as I am. If this video helped you a lot, then watch this video on market structure. Then don't forget to like and subscribe and hit that post notification button. Peace.